Good day everyone, Ali is here from Safi Financial Network. Today is April 22nd, 2022. We had very ugly week, to be honest, and anyway, if you want to slice it and dice it, this week for S&P 500, for Nasdaq, US 30 and the stock market in overall was very ugly. What happened to the market and what is next? Just be with me until the end of this video. We will go through different indexes and sentiment. But before going to the stock market charts, I just want to show you sentiment first. There are two interesting charts that I want to talk about. Here is our favorite one, which is AAII, and this is pretty important website. Just everyone needs to pay attention to this. All the big hedge fund managers, all the big stock market analysts they're just looking at this chart just because it has very broad based sentiment, history and database, which refers to 30 years. And since I think since 1990, this website gathered all the data based on the market sentiment. And as you see here, this is for 2 days ago. This is not updated yet. I'm sure that it's going to be more bearish now, but this bearishness is 43%. And when we are reading 43%, and this is the historic high, which is 53%, and this happened just in February, it gives us the idea that everyone in the stock market, including traders, long-term investors, or even short-term investors, they're all in panic mode. Definitely they are fearful, they are scared about the stock market, about the future of the stock market. Especially this sentiment goes to what's the investor idea for the next 6 months. And as you see here, 44%, almost 44% plus this, which means less than 20% are bullish. And this gives me, I know it is kind of repeating myself, and it is kind of like contrary to the market that, Ali, what are you talking about? The stock market is going down and you're still bullish. Yes, I am, just because bear market doesn't happen when everyone is bearish, and bear market doesn't happen when everyone just putting their money on the side. So that's the simple bottom line for myself, that even if you are in bear market and there is something wrong, just because everyone shouldn't be smart at the top, because at the top usually people got caught and they don't know what is going on after when price is going down. But right now, everyone is getting smart, and this is not usual. This is not historical, and it's not gonna happen. To be honest, in my idea, it's not gonna happen. First of all, second chart that I want to show you is this chart, which is put-call ratio, and I don't see anyone is talking about this, but this is the ratio between put options and call options, which is called PCC, or put call ratio. And whenever we are at the bottom, the rate of the put options are getting high, just because people are hedging themselves. And when we are at the top, lots of people are got their call option just because they want to just take advantage of the rally. And usually when the number of put options are going extremely higher than call option, we are at the bottom. This is again another contrary indicator. So let's just add S&P 500 to this chart, the one that I show you. So here is 2000, here is the top, right? So here is the top, and this orange line is S&P 500. So as you see here, the number of put options are getting high exactly at the bottom of the correction in 2018. And after that, market just off to the rally. You see that? And again, whenever we are hitting the bottom, this is COVID crash. This is another extreme high in the put option, right? So This is pretty usual when people are getting bearish. We are pretty close at the bottom. I'm not calling this as at the bottom, but you see that we are just hitting this one twice, and just recently today, this is weekly time frame by the way, just recently today we are getting the number of put options exactly the same as the COVID crash bottom. So when COVID crash bottom happened, we were just here. So exactly it was twice we just hit this line, you see this line in COVID crash, and the second one exactly coming to the down to the bottom of the COVID crash, right? So these plus this indicator tells me that sentiment is very, very bearish. And usually when the sentiment is extremely bearish, we are pretty close to the bottom if we are not. But anyway, so this is a sentiment, and we are not going to trade based on sentiment just because it is very dangerous. We can be on the wrong side and we can be very, very early. But this needs to be taken care of in our consideration, just because this is very important. Sentiment is very, very important, and we should look at it definitely. All right, so let's go to the chart, see what chart tells us. Here is S&P 500 weekly data, and in weekly data you see market had a very, very massive correction. This is the third consecutive week, and as you see here, this is the sign of exhaustion or capitulation. That's what I'm saying. This is the sign of capitulation without any lower shadow. This is oversold, extremely oversold in weekly data, and in weekly chart we see this one, especially when we have like higher shadows, just rejecting SMA 20, 50, EMA 42, EMA 21 on weekly basis, and we are just smashing price down to 42.56, which is the market close, right? Still we are in this bullish candle, which is positive, but any other how, if you want to slice it and dice it, this is not good looking chart. However, this is one of my favorite setup, to be honest, for the upside, just because we have a very, very nice candle, reversal candle, a doji candle, which is the sign of exhaustion, 3 consecutive candle coming down, and with capitulation form of candle. You see there is no lower shadow, it's tiny lower shadow inside this wide range bar. So this can be still positive if we don't take out this low. If we take out this low, that would be very, very dangerous, to be honest. And if we close, not just shadow, close below this pivot area, especially if we get close below 41.25, that would be, I think, the beginning of the bear market. And I just want to show you something else interesting. Here's the top of the COVID crash. If you just connect these to a pivotal area, you will see this is the bullish momentum that we have, a market just getting off this rally, and we are coming back to test after this breakout. So after this breakout, this is the first time that we are going to test. If we test this trend line and then reverse back up, that is very, very bullish sign for the market. But if we are getting close to this line and consolidates, or even if breakthrough down and close below this, that would be very, very bad sign for the market, especially for the bulls. And I think we will get to the bear market if we close below this. So again, keep an eye on this. I try to just analyze the market. I don't want to say we are at the bottom or we are at the top, we are at the bull market or bear market. This is the situation that I see. If we don't take out this pivot in a weekly basis, if we don't close below this on a weekly basis, still we are bullish. I know it is hard to say, but still we are bullish in a long term, in a longer time frame, right? So if you go to the daily chart, here is the daily chart, and this is obvious bearish trend that we have, or bearish channel that we have. All right, so we can go down to test this area, but we shouldn't close weekly. Again, this is a pivotal point that I just mentioned. We can't just close one day or two next week, but if we close back up above this trend line, especially above that 41.25, let's say 41. All right, so if we close above this, and if we don't get below this line, still we are at the safe side. But if we get close below this, and we just continue to stay below this, that would be a very, very bad sign for the market, especially for the bulls. Okay, so this daily chart, still, if we are getting below this channel, that would be very, very bad and negative sign for the market. Of course, we will be into the bear market. However, this is just a correction, and this is a 4-month correction. And if you go to the monthly chart, so monthly chart, I thought that April would be a positive, but it goes the other way, and April is just coming down, and still there is a possibility to test this SMA 20 on the monthly chart as well. So that is S&P 500. Let's go to NASDAQ, because NASDAQ has the worst situation, I think, among the other indexes. NASDAQ on the weekly chart, we are going down to test this SMA 100 on the weekly chart, and we are getting close below this. So this is first time, even with this correction, we didn't get below this and we didn't close below this. But right now, if you just zoom in here, we are getting close below SMA 100, which is pretty bad sign for NASDAQ. However, we are still inside this wide range bar, and just the only positive thing about the NASDAQ is we are still above this this trend line. All right, so this trend line, we are still above this trend line. And let me just okay, let's keep this, but we are still above this. However, if we close below this, we are going to spike down all the way to this moving average, going back to this wide range bar. You see wide range bar? And I just want to show you something pretty interesting for NASDAQ. Here is the weekly chart, right? So this is 2018 and going to the 2019, right? So this is after this strong rally, after Fed start monetary interest rate tightening or quantitative tightening. So when we had like a choppy market for almost a year and a half, then we are getting off to the rally, and then in 2018 we just go down correction. Now look at that, what happened. This is pretty similar to this, right? This is pretty similar. So we had a corrective move to the downside, testing 100 SMA almost. We have 1 week uptick to the upside, then we are getting close below this, and then that was a sign of capitulation. As you see here, we just test 150 SMA on weekly chart, and then we are getting back to the rally with a V-shaped recovery, right? So what was the correction from the top to the bottom here? It was almost 25% for NASDAQ to get the corrective move, right? So here is NASDAQ, right? So it was like 25% correction from the top to the bottom, right? So what's the measure of the correction now? So when we are putting this one there and then putting this one there, we are at 30%, almost 29%, if I'm not mistaken. No, sorry, that was my bad. So 22% correction now. So you're still having like probably we can just test this area, but that's pretty close to this correction. That's what I'm saying. It doesn't mean that it can go 25 or 30 or something, but I just want to say this pattern is pretty similar to this pattern, and the reason for both was this one, trade war and quantitative tightening, because Federal Reserve decided to go 25 basis each month I remember October, November, December, each month they just increased the rate 25 basis until January 25 basis, and then February they just reduced back down, and then they start quantitative easing after that. But this one is pretty similar pattern to this one, so we can have another lower low, I would say. Probably it's going to be tiny one, but that's going to be lower low. Probably we test this area, or we just piercing through and then coming back up. There is a possibility, so I'm not gonna say there is no possibility, but there is a possibility. But just be careful on that one if you want to trade NDX or Nasdaq. Okay. So let's go to Dow Jones, because Dow Jones was one of the strongest index, and as you see here, this week was very sharp sell-off. So I couldn't see even throughout this sell-off, I didn't see Dow Jones was like this. So this wide range bar is very strong to the downside, and again this is the sign of capitulation. So this is a very exhaustive move, and this is the exhaustion candle. And probably next week, again, that's what I'm saying, next week we can see a bounce back to the upside. I don't know if it's gonna be bounce back or just a dead cat bounce, or the bottom for the Dow Jones, but for sure we will get some bounce next week, even for a day or two, just because this is exhaustion candle, this is exhaustive move to the downside, and this is the sign of capitulation. And this is a daily chart. I don't see any daily candle to the red side, to the downside coming like this. Probably you can say this one, but after this wide range bar, you see there is an uptick there. So just one day it went up and then coming down. So it's going to be rare for lots of indexes or any equity asset to see we are seeing a consecutive, such as this wide range bar, and then consecutively going down, right? So it can't just go up and then coming down to regain the energy for another downside setup, right? So probably we will see another uptick to test this area and then coming down if it wants to go down or continue go down for the Dow Jones. And the Russell 2000, Russell was the same. Again, last 2 days was pretty ugly for Russell, and there is no shadow, to be honest, and we are just testing this area. And I think Russell is going to see a new lower low, probably a new lower low to fill up this gap, and probably it's going down to 1700 area, because now it's 1932. If you take out 1881, then 1800, that would be the case for Russell 2000, probably going down to this consolidation. It is, to be honest, very frustrating for Russell 2000, because after this breakout to the upside, lots of people, especially me, I thought that this is going to be a nice breakout after a monthly candle. Look at that. But that was obviously bull trap, and just trap people and shooting price to the upside and then coming down. Right now, bearish consolidation coming down, and I think Russell is poised to get to this level 1754, which is this wide range bar on monthly chart, and this is the top prior COVID. This is the top prior COVID. This is 2018, but that is very solid level for Russell 2000. So 1754, I would say Russell has room 200 to the downside, right? So for the Russell 2000. Okay, so if you like our videos, please smash the like button. If you have any question, please put your question in the chat box. Next week we will have lots of earnings. Facebook is coming. I think Amazon is coming as well. So there are lots of volatility, lots of good and bad news for the market. I think Google has earning as well next week. So When these big stocks are going to announce the earning, for sure there will be lots of volatility in the market. I don't know if it's going to be upside or downside, but for sure there is going to be tons of volatility to the market. So just be careful on that. Even if you don't want to take volatility, just stay aside and just look at the market. There is nothing wrong to just be a visitor in this situation. Okay, have a wonderful weekend. See you on the chart. Bye-bye.